How do you even earn 20% stablecoin yield on Solana? Or can you even trade perps without any liquidation price? Stick to this video and you'll find out the answer. So in this video, we're going to talk about a very interesting protocol called Mooncake Fi. And before this video starts, everything stated in this video is not a financial advice. Please do your own research. But yeah, we actually published an article about Mooncake Fi, but yeah, we're going to talk about it more in this video and some actionable steps that you can take to make money. So what is Mooncake Fi? So Mooncake Fi is actually a sub protocol from RateX. So if you don't know, RateX is like a yield trading platform, more or less like Pendle, but it's natively on Solana. So if you notice, Pendle is not live on Solana. So these like RateX or like Exponent is yield trading on Pendle. It's a very promising protocol. It's a very useful protocol. See, it gives you like 15% fixed yield on Solana, or 15% fixed yield on stablecoins. But yeah, we're going to talk about Mooncake here. So Mooncake is actually the sub-protocol of RateX. So while RateX focuses on yield trading like PT or YT trades, so Mooncake utilizes this infrastructure to offer liquidation-free leverage tokens. So the main product of this protocol allows degenerates like us who like to speculate on price heavily to actually trade perps without liquidation on leverage tokens. So you can see here 10x on Sol, 5x on Sol. So meaning if you actually buy the 10x Sol with your Sol tokens, you will be exposed to 10x leverage. By the way, the effective leverage here is around 9.7, but when rounded up, it's 10x. You can see here it's changing effectively, the effective leverage here on the token itself. So when you buy this token, you will be exposed to 10x leverage long positions too. For example, here, there's some ups and downs. This is mostly a higher risk trade. If you're very bullish on Solana, you will buy this token and you will get 10x leverage without any liquidation risk. But if the token actually went down, for example, here from the highest here on January to today's price, it's around 80%, yeah, 83%. Meanwhile, the true drop only around 13%. So it's almost 10x, 9.6, 9.5x the leverage. But if it actually went up, you'll get 300% here from the bottom. Meanwhile, the true upside is only 20%. So you can get leverage exposure with Mooncake Fi. I know your question. How about the stablecoins? Well, you mentioned about the stablecoin yields, earn that on Solana. The answer is they're earn tap here. So I'm introducing you to Mooncake USD. So I'm going to explain a little bit about what mUSD here is. So you can see mUSD 10x Sol market, 3x Sol market, 5x Sol market. So what you're doing here is you're actually providing liquidity into these leverage tokens. So these are the earn pools that makes these leverage trades possible. The higher the leverage, and of course the higher APY that you will get. So this is quite interesting. So I'm going to explain how mUSD actually generates yield based on the protocol documents. The underlying token here will get what you call funding position, right? So the Moon splits the market into two sides, which is the funding and the leverage position. So the leverage position, the borrowers, traders buy like, for example, 10x Sol to get amplified exposure. When you are actually longing on Solana, if the funding rate is actually positive, you will be paying funding fee for this privilege, right? Just like any other perps trade. But on this mUSD, for MoonUSD here, for different markets, let's take the 10x Sol market for reference. You deposit stablecoins to mint, like you deposit USDC, simply USDC on Solana to mint mUSD on the 10x Sol market. This token collects the funding fees paid by the leverage traders. So you will get the funding fees that the leverage traders actually pay that. So that explains the higher the leverage, the higher funding APYs these stablecoins will get. So like unlike a rigid stablecoin like USDC, mUSD is an accumulation token. So the funding fees paid by traders are likely added to the pool and then causing the price of mUSD to slowly appreciate over time, rising above 1. And so the funding APY right here is actually the annualized rate of return based on the current demand on leverage. So if there is low demand for leverage, you will get lower returns. But in a bull market where many traders are buying 10x all, 5x all, this rate increased. And yeah, the coverage ratio for this is a critical health matrix. It likely represents the ratio of the total liquidity, the TVL, versus against the utilized liquidity for open interest. So a high ratio of 100% will be very good for mUSD holders. So a high ratio like this is very healthy. It means the vault is over collateralized and there is plenty of liquidities for LPs to exit. But if this gets below 100%, you must be very careful, because yeah, you can get like low liquidity. There might be some delay for withdrawing liquidity of USDC from these mUSD markets. So that's the risk. That's the user risk that you have to know. So it's not only, oh, good yields, but there's also some high risk when it comes to leverage. Nothing comes without any risk. So right here, you can also see the rebalancing history, the funding curve. Right here, right now, the utilization ratio is 46%. That means there is decent demand of leverage in the market right now, even though it's kind of trading lower right now. But even there is some leverage demand here based on the Mooncake Fi. And so you will get decent 24% APY. It could get 80% APY when prices really went up on bull markets. That means more funding, higher funding rate. It means the long pays more funding fees, if that makes sense for you. So yeah, it's very simple. You just connect your wallet and then just deposit USDC and you'll get mUSD. If you still want to get above 20% returns, you can get with the 3x soul market. It's the way smaller risk because it has smaller leverage. But yeah, you can actually choose a lot of markets, not only Solana here. You can also get JLP, which is the Jupiter Liquidity Provider token. You can also put leverage on that, although it's not doing that great, but it's an option for you in the bull market. So analysis like this is very useful. It means if you put this on your memory, when bull market arrives, and it will arrive, hopefully, you can get more returns by just simply buying these spot tokens, these leverage tokens, without any risk of liquidations on bull markets. So this is very beneficial on bull markets, but this is a high risk trade. Please trade with care and trade with good risk management. Do not put all your money here for leverage. That's not what this video is saying, but this is just an option for any of you who are finding a great alternative to trade without any liquidation, or just earn stably with stablecoins here with very decent returns. So yeah, I think that's mostly it for this video. I hope you guys find this video very useful like I do, and I'll see you on the next one.